Rachel, I appreciate, having you on here. I know you talked, you mentioned, the two properties and a property that you just closed. And you know what? We always stayed in contact. I recently saw your post on LinkedIn. It mentioned like kind of a list of the things that you accomplished and did. And it's kind of crazy because as those who are in this know, like it's so difficult to get things done and it's such a grind. So we know it certainly probably wasn't just an easy A to B, journey. So I'm really looking forward to hearing more about that. But yeah, let's start, I guess, kind of a little bit of how your journey in real estate started, and then, kind of talk about what you've been up to recently.
Sure. Yeah, as I mentioned, I'm an engineer. So coming from, been in the energy industry since I graduated college. And back in 2016, that energy took a big dip. And both my husband and I were in that. And we were also a brand new kid at the time. So we said, hey, we need a backup plan. So we started getting into single family rentals, went super cheap. We bought two single families for $40,000 for the both of them. It gives you some idea of how great they were, but they were in a good spot for renting. So we fixed them up ourselves, did all the work. It took about 6 months to get them really up to date and get them re-rented, but we just sold them. Those are the two I sold this year. So we were able to make quite a bit on both of those. We sold them for about 4 times what we bought them for, and put into them. So that those turned out really, really well for us. Since then, we started buying property a year, slowly increased the size, went to a triplex, went to a 6 unit, went sideways into a mobile home park joint venture, came back and I'm focusing, kind of trying to figure out what I wanted to do. And now I've really narrowed down into a multifamily apartment building. So I did 2 syndications last year, bought one myself this year, did another syndication this year, and then we've got one more actually just went under contract for this week. So got deal flow going on, all sorts of fun stuff. And yeah, I mean, there's been all sorts of things going on, to be honest. So I'm happy to talk about any of it, get into whatever weeds we want to get into.
And you're located in the Charlotte area, and were those first I guess, tell us a little bit exactly like where you are and then where those first deals were.
Yeah, so the first couple deals we did, everything we wanted to be able to drive to that we did ourselves initially. So the first couple we did were in Gastonia, South Gastonia, which is not a super nice area of Gastonia, but since then there's been a lot of building going up there, and so there's been a lot of growth out there. And the other ones we have one out in Shelby, which is about an hour west of Charlotte. We've done another couple. The triplex was in Gastonia. Uh, Pretty much, we got a 6+ up in Dallas, North Carolina. So that's maybe 40 minutes outside of Charlotte, out west. And mostly, I just like west of Charlotte because nobody was paying attention to it until maybe a couple years ago, during COVID. I think other people started paying attention to it. Everybody else was all over the Lake Norman or Concord or down south, but everybody's like, Gaston County. We don't like Gaston County. I was like, I don't know why. Mecklenburg County sucks. Like for landlords, Gaston County is really landlord friendly compared to Mecklenburg. Permit office is really nice. Like the prices were really good. Rents were decent. You got a lot of, it's one of the most populous counties in the state. So there's a lot to like for me, about that side of the city. And you also get some of the growth coming out of Charlotte. So that's where most of my stuff is. I've got the 28 unit up in Mount Holly, the one down in Columbia that we just bought this year, and then the 65 unit we just closed on that into July, and that one's actually in Charlotte proper. But yeah, and I'm also partnered on a 106 unit out in Tulsa, but that's a syndication where I was trying to learn. Like I legitimately got in there as a asset management consultant because I knew enough to give them feedback on what they were doing and what their business plan was and kind of keep them on track without needing to go out there. So I could get in on the active side that's the only property I've never physically been to, because that team out there is I already have boots on the ground team members who I trust that I've been working with for a couple of years. If either of you know Susie Sevier or Michael Bernhardt, like that, they're who I'm partnered with and they do a great job out there.
Okay. Yeah, Susie, she's familiar. Yes.
They're all over LinkedIn.
Yeah, 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 yeah,
Yeah.
yeah. I think they have a unique story too as well.
I do.
So now that's kind of interesting because so with that, you were able to kind of use your expertise to provide value, I'm assuming, and give in order to get part of that team, I guess.
Yeah, exactly. I mean, I brought some capital along with me, but it honestly wasn't much. It was mostly just me trying to bring in my expertise. And I've been talking to Susie as part of a networking group for about 2 years. And so when that there's a whole nother story about why I had capital to help out with that deal because something else fell through that wasn't supposed to. But when I started thinking about who I wanted to partner with, I gave her a call to see what kind of projects she might have up, and that was one of them. And we talked through it, and it was a good deal. So I asked if I could come on and learn from them and help them out where I could.
Awesome. So then, because you say we, who are you partnering, especially on those first deals?
My husband.
That's the way to go,
uh,
right?
yeah, no, we started out just doing stuff ourselves. Like the single families, like I said, were super cheap. We bought the first three single families. We bought all cash because they were so small. Both my husband and I are engineers, and we're just very risk off in terms of financial situations. So we're like, we don't want to be stuck with any kind of risk going on. So we're just gonna buy these all cash, fix them up ourselves, make sure that this whole thing works. Since then, I've partnered with a different group on every property that I've done. So I still haven't found my forever partners, I'll call them. Like some people, they meet up with their partners first thing before they even buy a property and they just go. And I that's super useful. Like if you know those people, go for it. But I came into real estate a little bit sideways. And so I've been kind of, somebody called it dating. It's like I've been kind of dating different groups, trying to get a feel for who does different things better. Some people are better at organization or deal flow, or some people are better at the asset management side. Some people are better at the lending side. Like it's just who has what relationships and trying to figure out what will work for a long-term partnership.
And then how about I guess with your husband, as far as were you both got into this together, like both excited about it, or was it one that brought in the other? And then how do you kind of break up your roles?
Yeah, so when we first got into it, we were doing it pretty much together. And it was, hey, we both want to give this a shot. My father-in-law is up in Roanoke, Virginia, and he's got about 20 single families. So he'd kind of put the bug in our ear to, hey, if you want to side hustle, this is a good one. And the more we looked at it, the more it made sense. But since then, I mean, it's most like he's been more in the background, I'll call it. Like he really likes the financial modeling and he's really good at contract reading. He does business development for a living. But the business is pretty much all me. Like all of the other stuff, I run it day to day. I do all of the finding and vetting and boots on the ground and talking to contractors and yelling at property managers and all of those things. That's all me now. I'm working on. I did just hire a VA last week for the first time, so I'm working on ramping up the team a little bit to get some more help going on. But up until now, I just quit my full time job in August. That was part of why I put that post up. So I'd been working full time, but on a kind of slow off ramp for the past 2 years, and it finally got to be the point where I need to go full time real estate to be able to do real estate well, and I couldn't do my other job well at the same time, as well as my family commitments.
Right. Yeah, it's a lot to do that. So then so you obviously reached that point where you said you got to make a decision of you want to do something well and not do everything little, halfway. So that's awesome that you were able to do that. So that was just this summer that just passed, right?
Yeah, yeah. Just what, little over a month ago, I officially quit my W-2 job and yeah, went full time real estate, and it's been awesome. Like the relief of not having like all those competing priorities. Like I went from three phones to one phone. Like I don't know how many of you have multiple phones to manage stuff, but it's just like, oh, I have one computer, I have one phone. Like I can streamline all my communication. It was a huge relief for me, and I've been able to really focus on ramping the business up and working on the business rather than just trying to keep my head above water with everything else going on.
I think what I also like, because like I mentioned, we used to talk, stay in contact, and I it seemed I find that there's multiple ways of doing this. There's some people that are just straight syndication, some people that are JVs, and I kind of think there's a place for both. Depends on. And I think you're kind of a little bit in that. You've done joint ventures and you've worked on syndication. Where do you see yourself focusing going forward?
So I like both. I like having, I go where the returns are, is the best way I can describe it. So going into the mobile home park, I didn't know, I'd never done a mobile home park before, but my partners had, and they were looking for somebody close by to Hickory. That one's up in Hickory, North Carolina, about an hour north of Charlotte. Um, and it was one of those where they're out of Raleigh. It's small enough they didn't want to. It's small enough it didn't take on-site property management, but the deal like they got it under contract for was really great. And I was like, hey, I want to learn, and the numbers look really really good here, so I'm happy to be the partner. And they found the deal, so I did the asset management piece, and then we split the equity 50-50 was how that joint venture in particular got split up. And that one's been really good for us too. Had to move in a couple of mobile homes. I learned a lot, but ultimately you kind of feel your way through which ones make sense to you. Like I feel you run the numbers, but you can only run them for so long until like you'll get stuck. So you really have to at some point just say, all right, this looks good enough. I mean, every time I do underwriting and try just do an analysis on a property, I always run two scenarios: an average case and a kind of a worst case scenario. Like I'm not making like a black swan event or anything like that, but I am throwing in there like higher than normal occupancy, no rent growth, like my loan, like I always have fixed rate loans if I have a loan on the property. So that's normally not a variable, but super high expenses, like stuff goes wrong. And for me, as long as that worst case scenario, I can still meet my loan payments and my maintenance payments. So I may not be making money, but I'm at least not forced to sell and I can wait it out. Then the deal, and then on the average case, I'm making the returns that I'm looking for.
Mhm.
Then the deal works for me. Like I'm not looking at best case in any kind of situation because I don't think that's reasonable. Nobody knows what the future is going to be.
Yeah. And also when you're looking, and it's good to have the flexibility that, when you're not thinking of it like, okay, I'm looking at this deal, it's going to be a syndication only. And in that case, you're taking it out to investors. So then you're probably looking for higher metrics on the returns where you might be willing to take on a little more risk if it's a joint venture in your own, knowing that, maybe you just have to hold on to the property a little longer. It's going to mature and reach it. So that's a good point. Tell me a little bit, you mentioned about deal flow. Um, now that you've closed a few properties, closed deals, is it much easier dealing with brokers and getting deal flow coming to you?
No. I'm sure that you guys wish the answer was yes, but no. I'm
It's still
still a
tough.
relatively small fish in the Charlotte pond. Like I know that. The deals that I've bought have either been on market and gone under contract multiple times and just kept falling out. And so I was able to go in, see it in a more creative angle in order to make it work, and then put in an offer that made sense for me, but for other people, they kind of I don't understand what you're doing. And they've worked out so far. So I like it is working. Or it's in that I call it like the brokers market. It's like not on market, but the brokers are putting it out through all their email
Right.
lists. So it's not off market either, strictly. So those are kind of, other than the mobile home park, which was strictly off market. Pretty much everything I get is somehow on market. I'm not the only one looking at it. It's just like the one in Colombia is a prime example of looking at it creatively, because they were asking 2.2 million for it, and it definitely wasn't worth that. But it also had the opportunity to add two more units that weren't there, as well as it had a whole extra parcel that used to have 16 unit building on it. Um, and there's just some other things like that that weren't being advertised, that weren't being looked at. And so the property was in distress, but it didn't take, it's not taking that much capital in order to get it back up to a good level. And the city's investing a block away and all of this nice stuff on Main Street and pulling, like doing grants and stuff to pull businesses in nearby, and all this other, there's a hospital that's right there, there's a school right there. And just kind of seeing that the property was under distress, it had some history to it that makes it a cultural shift that you've got to go through. So it's not going to be a easy thing, but it's certainly like the money, the returns are there if you're willing to put in the work.
Awesome. So what I'm gonna do right now, just anyone else, they have any questions, just free to jump in. I still have a few more, but just it's small room, so just jump in if you have any questions for Rachel. Um, Property management. I know that Joe mentioned he used to be a property. How are you handling these? I guess you're drivable, but obviously, like the Columbia sounds like a larger property. So how are you dealing with the property management aspect?
Yeah. So I self-managed most like the first stuff that I did. So up until I got even the mobile home park, I still self-managed. So right now, after the sales and stuff, I'm self-managing about 10 units, which once tenants are trained and everything stabilized, isn't that hard. It's those initial year or two of getting everybody trained to not call you or you're just not going to pick up if it's not a true emergency. Um, but I do use third party property management for the other larger properties. All the anything that's other than those 10 has third party on it. Finding that is difficult. I'd say I have one decent property manager and one that appears to be going to be great. They were the ones we put on the 65 unit because it was large enough we could go to a different kind of level of property management to get it half a like a property manager for half time on site, full time maintenance person on that one. And so we get better service once you get to the size where you can have it on site, even a half time on site person. But that one, I'm very happy with how that property manager is working out right now so far. But we've only had him for a few months, so TBD. But for the other ones, I've actually ended up using the same company for the other ones, and they've done a good job. Like it's not great. It's not the same level you're going to see on somebody who's on site, but for the portfolios they're managing, I don't know. I'm having to manage them more than I'd like, and at some point, I'm going to part of getting the VA on board is to see if I can transition to using virtual property management and having her do property management from the Philippines, plus have boots on the ground here, because it's really not that different than somebody sitting in Greenville versus somebody sitting in the Philippines um, to manage the properties. So yeah, that's kind of where I'm thinking I'm going to go, but I want to test out some of the functionality around that first in some of my smaller properties before I roll that out across the board and then find out where all the pitfalls are.
Oh, interesting. Okay. So that's the because I know a lot of people use the virtual assistant for marketing or other type of like products of that, but you're going to get them involved in the real estate aspect of it.
Yeah, I mean, the one I hired is 3 years property management experience. She worked for a Texas company for before, so this is not her first time running property management. I'm actually much smaller than what she was running before. So yeah, there's definitely, it's amazing how good their English is, how much they understand the marketing, how much they understand the processes involved. She's asking after, do you have Buildium or Appfolio? Like she knows all the questions and how to run the different softwares. I'm too small to have those softwares, so she gets to deal with my patch together apartments.com and stuff for right now on my 10 units. But the goal is to help let her work together with me to help build the processes so that long term we can keep growing the portfolio and hopefully switch her over to the 28 unit, 29 unit, the 6 unit, and any new stuff that starts coming up that's too small for on site, but doesn't like I don't want to have to manage myself going forward because I am trying to grow.
That's awesome. So and so the 29 is the one that's in Columbia.
Yes.
And
Yeah.
is that your furthest property? And I guess that's what, like an hour and a half from you?
Yeah. Yeah.
Okay, that's excellent. And then I guess so, it's kind of interesting because I like to hear a little bit about your story of how, the kind of walking away from the W-2 and how much lead time did you give yourself to like, hey, we're gonna do this on this day and how did that work?
So I originally thought I was gonna quit last summer. So last July, I asked, I actually ended up going to a contractor position with them. I got really lucky that they wanted whatever hours I would still commit to them. And having that W-2 was helpful in terms of getting loans. So one of the things when you quit your W-2 is the banks frown very much on real estate income only because it's not consistent. They can't match it up to their loan payments very nicely. So having that ongoing W-2 even at a lower level of hours was helpful for me, and it just kind of worked out that I could stay on there. And I was planning, I told him when I did it, I was planning to leave the end of last summer. But it just kind of ended up working out. And it was like, all right, no, I'm just going to stay. I was able to balance that with family and with my real estate stuff for longer than I expected. And then the summer, it just, like I said, we got the 29 unit, we got the 65 unit. I've got like all this other stuff was happening. It's like, okay, I don't have time to do a good job at what I was doing at my other company. And so I actually just I gave him about 2 weeks notice. And then I said, hey, if you need me to stay on a little longer and like consult, like help get somebody ramped up, I can. Um, but we ended up just saying, yeah, 2 weeks is enough. And I was done. It was pretty, I don't know. I got really lucky to have a slow rate like that. Not everyone can do that.
So what was the first thing fun that you did when you had the free time?
First thing, uh, I think we got some really nice steaks and a bottle of wine. We're more like homebodies. Like we don't do huge stuff, but like my husband and I celebrated a bit, and I don't know, it was kind of
Got a
fun.
little,
And yeah,
you
I
got
got my standing desk. Like that was very big for me. Like I paid for my super fancy standing desk with my butcher block top, and yeah, been very happy with that so far.
awesome. So yeah, anybody have any questions, jump in. And what I like to do is kind of be a little more interactive. So get like everyone, what they're looking forward to do for the end of the year. So obviously, you just talked a little bit about getting the VA involved, but like what's it's difficult, especially when you're doing this on your own, or like it's when we go to work 8 to 5, whatever it is, like you have certain schedules. Now, how are you kind of putting goals out there, and other than the obvious, finding a property and more deals, but so how are you structuring, and what are some of the things you're looking to do for before the end of the year?
Yeah, so I kind of redid my goals once I quit a little bit so that I could focus more on real estate. And I tried to think through because you can't guarantee a deal, right? So making the goal to have a deal by the end of the year is actually not something you can really control, at least not without throwing a bunch of money at it and making a dumb decision potentially. And so instead, I tried to make my goals more around I want to put in an LOI like every week on something. I want to ramp that up, but by the end of the year, I want to be able to put in an LOI a week. And some of those will be repeats, right? Like sometimes you put in LOI and then you wait 4 or 5 weeks and it's still in the market, so you put it in again. But that kind of putting offers out there is a big one for me. The other things that I'm going to do I've got certain criteria about the properties that I'm operating right now in order to get them ramped up. So there's, like I said, the Columbia property is a pretty heavy value add. So there's a lot of getting the turns done, get the occupancy to a certain level and have people coming through the door at a certain rate in order to start the lease up funnel. And then on the other properties, like getting a wait list going and making sure the marketing's kind of running. And then for me, having the VA manage a majority of my properties, like not all of them, but getting to the point where that process is working is a big deal for me. Because once I get, assuming it works in the first place, but once I kind of get that all settled in, that will really help with my growth. Because then as I add properties, I don't have to worry about finding a new property manager. I can just give them to her, like add more units, give them to her, and she can continue managing them, and then I'll have boots on the ground here. So that's really a big one for me. And I've also added a bookkeeper in, so I want to get them onboarded and make sure I'm getting the reports that I need. I just added them last week, so we're still working on getting everything set up.
So it seems like the LOI is definitely a good topic. There's a couple questions in there from Ted and Tiffany.
Oh,
Where
hey, Tiffany.
so where LOIs, like Tiffany asked, like like, or we underwrite these deals, and you're like, we're way off. And so do you have like a number that you would put in still, and or do you feel like if it's like 30-40% off, I'm not gonna put an LOI for that, or just you put what you think it is?
It depends on how interested you are in the property. So if it's something that I'd be like, I don't offer on something that I don't want. But before I put an LOI in, you're typically talking to the seller's broker. And so you can get a sense from them hey, I'm this far off. Is it helpful to put in the LOI or not? And the first time I asked them that question, sometimes they say yes, because then they can tell other people, oh, we've got offers on the table. Like them being able to say that legitimately actually helps the broker. And that helps build that relationship regardless of that particular deal. But the other thing is the second time I look at it, if it's still in the market, I just put the offer in anyway. Because even if they said no the first time around, if it's still in the market, then somebody else, like nobody else is seeing something different than what I am. And so I'll put the offer in to at least start the serious, like say, hey, yeah, I'm really serious about this. And my LOIs always have a cover page to them. I don't know that everybody does this, but I always put in there like a little bit background on me and the team and what we're planning to do with the property, so people can see that we've really thought through it and that we're really know what we're doing and not just throwing an offer out there. And because a lot of times, especially in the current market, people are scared that buyers aren't going to close, right? Like especially with financing the way it is right now, like that's a big reason that things are falling through towards the end of the deal. So the more you can provide confidence that you are going to close on this, even if you're putting in a lower offer, depending on the seller situation, they may be more interested once they read through it to see, oh yeah, well maybe I'll at least talk to them. Like they may not accept it right away, but they at least might come to the table. And that's really the first big step, is getting them to come to the table if they're overpriced.
That's a good point. Using your track record and the fact that you closed previous deals and let them know. Yeah,
Mhm.
that's good. Cool. So right now I'm going to kind of throw it out there for the audience. And anybody has any more questions or just wants to talk about like what they want to do and look you're looking to do at the end of the year, feel free to jump in, or I'm going to start grabbing people in there. But um, one thing I'll say for myself, kind of to close out the year, right now I'm working on a project. I just love Greenville, South Carolina. So, I've connected with a group down there, and it's it's not, it's built to rent, but basically Arn is his group. They're purchasing it from the builder. So, it's not true construction and then rent it from there, but they're buying brand new asset, and then going to be taking control of the property and then renting it out. So I love that area, and I visited so many times, and I see so much growth really. And just driving down I-85 and Charlotte down through into Greenville and that area. So for me, my continuous goal, I'm sitting here in New York, New Jersey. I'm not in a position. I just had my son start college, so I'm nowhere near walking away from the W-2. So for me, it's kind of building the track record for an investing down in Charlotte, Greenville, and that kind of area with good operators, and then kind of set myself up for the time where eventually I will go down there and then become the boots in the ground for others that are up in here. So it's connecting with a lot of investors that want to invest down in North and South Carolina, and really just educating, because it's we talked about this before we get on. It's very hard to explain the amount of growth there is down there until you've really been there and seen it. So that's been a big goal of mine, is just to continue to talk. And I've grown to the point where I feel more comfortable just talking to people, in my town, and, parents of children or kids that I go to school. And you kind of find out that a lot of people are already involved in real estate. So that's my goal for the end of the year. But good. Here's another question here from Tiffany. So how much in soft commits made you confident you can close, or general confidence in being able to fund a deal? So I guess this is more like geared towards syndication, if I'm reading that correctly.
Yeah, I was going to type up an answer if I can answer verbally too. So I believe in getting the deal and then going to get soft commits, because if you go after soft commits and then go get the deal under contract, people tend to walk away more. Like even if you're talking to them about it, like something about being like, no, I have it under contract. If you don't sign it now, like you're not gonna be able to get in because this is gonna be a really good deal. So it depends on how much you've got hard, like when money's going hard and stuff like that. So I'm typically willing to spend 5-10K or something like that to get a property inspection, get some other like kind of basic stuff run through on the property, so I have those details available to say, yeah, I'm planning to continue going after this deal before I get investors on board. Because I don't personally I don't like doing is getting investors on board and then backing out of the deal because of something I could have found within the first week of due diligence. That's just my personal preference. I know other people get people on board first, so you know you have the money to close. But I find if I run the numbers right and I've got a really good deal, the money will fall, does typically come around. It takes a lot of work. Like I'm not saying it's easy by any means, but you can. It's I find it a lot easier, and that way you're not backing off in front of investors for any reason. Like you've already got. I can get during between the LOI and when the PSA is signed, I can get loan commitments, loan numbers out. I can get insurance estimates out. I can get a property inspection done within the first week of the PSA, if not sooner. If you get an early access agreement in the LOI, you can get a lot of the stuff that would throw a deal off before getting investors involved. But that's just me. Like there's so many different ways to do this, and it all depends on just how you want to run it.
Yeah, Jeff, that's for sure. All right, let's see. Any other questions? Oh, Alan dropped in a little information about Rent Ready. I hope I'm saying that. An all-in-one property management company that specializes in small properties. I guess that's part kind of a little bit going down the route that they're talking about using outside or virtual assistant help there. Cool. So anybody else want to talk a little bit about what they're looking to do to close out the year? Yeah.
I have a question for Rachel. I'm not sure if you mentioned this already and I missed it, but like what is what was your salary range and like what like how much value are you delivering by leaving the job, right, and doing this full time? So like, are you taking a risk? Um, I guess in and going at this full time now, or you already meet that threshold where it fully replaces your salary?
Yeah, that's a very good question in terms of mindset and risk on, risk off. So one of the reasons I stayed on for that extra year was to make sure that we were covered. And my husband and I went through our budget in annoying detail because we're both engineers and no spreadsheets way too much. So we knew exactly how much, including contingency, including taxes, including our like if we needed batteries for our cars, like all these weird little things that pop up, and including like how much we're budgeting for Christmas gifts, how much we're budgeting for trips, like making sure the fun stuff's still built in there. So we knew what number we needed to hit in terms of a monthly income in order for me to be able to leave. And so we made sure that we were hitting that before I completely quit. That was one of the reasons I ended up staying on for a little while longer, was to make sure we'd really stabilize that. Because like if I left last year, it would have been fine. But staying on that little bit longer and having an extra income for a little bit longer helped. And as long as I was able to do both well, I was comfortable doing that. But when I couldn't do it well anymore, it was like just gonna go do real estate. That's a good question.
Yeah, it's
I
a
think
great.
the cash flow helps. Sorry.
No, I was gonna say it's I think it's a great question, and then it's such an individual thing because
Mhm.
everyone has like different. I know like just like looking at our situation, like we're in Jersey, and I guess how do like a upper middle class town, very high taxes, and just with me and my situation, my kids are kind of I got one in college, I'm gonna have one in 3 years, so we look at it like everyone in our town, like their kids graduate from high school, and you immediately see the for sale sign because now you're putting so much into the school system, doesn't make any sense. And but then where do you go? So that's where kind of like our plan is eventually just to go down and downsize a little bit, go down into the Carolinas and move out there. But it's so individual for everyone in their, like how they're going to plan it out that if in your, it's great that you're able to already have cash flowing properties that obviously
Yeah.
work.
And I mean, like we started in 2016. Like this is not, hey, 2023, I suddenly have enough income. This has been building over many years to get to this point. So it's not instant, but it does work, is kind of the point about real estate, is as long as you kind of keep at it, you find your path. There's infinite number of paths in order to get there, but I really believe real estate's one of the best ways to get there. It's the most like consistent. You know you can do it. You just have to figure out your particular path through it with that meets with your lifestyle.
Yeah. So, John, I don't know if you're able to chat because I wanted to actually ask you a question. So John, he's part of a group, and he mentioned in Greenville, North Carolina, Jacksonville, and I think he's also got an interest on tour too, because he's another one that you've been able to leave your W-2, but something that, like you said, it's happened over a couple of years and a couple of properties in the group. So I don't know if John, you want to share a little bit about, kind of your experience and then your, what you're working on, your goals.
Yeah, well, the what was really cool is and kind of Rachel kind of touched on it, was it kind of snowballed. We had to get the first deal in. So once we had the first one in, then at least the brokers kind of opened up saying, hey, these guys can perform, So it was only me and another partner on that very first 16 unit deal in Greenville, North Carolina. And like I said, snowballed from there. Then we went to a 52 unit, we went to a 124 unit, and then a 48 unit, all in the next year. So we closed on 2021. We closed the last day of the year on that 16 unit, and then the next year we were able to pick up 3 properties. The goal for So now we're up to 6 properties. Like I said, a few in Greenville, 4 in Greenville, and 1 in Jacksonville, and we just signed a PSA for a 90 unit in Jacksonville. It's funny too that you mentioned Shelby, Rachel, because we have an LOI out for a 29 unit in Shelby, and I think there's
Shelby.
another.
I hope you get it. I think that's a great one.
Oh, I'll definitely reach out to you then, because it's so. We actually just pulled back a PSA out of Charlotte proper. It was a 120 unit that the numbers didn't work out. But in any case, so we did the Shelby one, and is there one called Newton or Newtown or somewhere near Shelby?
Mm-hmm. A little bit out there.
So yeah, we're looking at one of those two that we have an LOI on.
That's a little tiny. That's rural North Carolina. Like, you're getting out there now.
Yeah, most of our stuff is on the east side of the east, eastern part of North Carolina. Now we're trying to go, trying to branch out a little. But any case, like I said, the 90 unit is under PSA right now. We're going to start the capital raise mid-October. I'm going to head down to North Carolina probably the first week of October to do due diligence on the 90 unit. But the goal was to try to get a property per quarter. And like I said, the nice thing is when I said it kind of snowballed, is the brokers know now, like when they talk to us, that we could perform, that we could get to the closing table. So that makes it a hell of a lot easier. And I got sidetracked, but my whole point was, 2 people, it was only a joint venture on that 16 unit. 2 people went to 4 for our 52 unit. And then 4 people went to 8 for the 124 unit, for as many GPs are on there. And then the 5 of us, there's 5 of us on the 48 unit towards the end of the year. So, but the whole point was, we were also part of a mastermind. That's how I met Jerry. But we kind of opened it up to other people in the masterminds who were kind of banging their heads, and they couldn't really, for whatever reason, their LOIs weren't getting accepted, or, they certainly weren't getting to PSA level. So we kind of opened it up a little and said, hey, what can you do? And we'll open it up, the GP part of it, saying, hey, we'll put you part of the team. Can you capital raise? Can you asset management? What can you do? So that's kind of what we did on that, on the last one in Jacksonville, the 134 unit. We got that one across the goal line, with no issues. I mean, like, we raised close to $6 million in fairly quickly. Like, we had it open for like almost 30 days, and we had the money. Like, we got to the closing table in like under 10 days. So it was opening up, and we have a lot of investors in there, and we have the GP kind of split up a little bit, but it's getting us, we could, like I said, we could go to any table now, and people are like, hey, these guys can do it. So, but yeah, the goal, and I think the question was the goal. Yeah, we're trying to get a property a quarter, if not more, and we'll continue expanding the team if anybody wants to help out or whatever the case is. Obviously we're looking for more capital raisers than anything else, but whatever you can contribute to the team is what we do.
Yeah. So yeah, I want to, actually that's perfect that kind of like the goal here too of this, meeting here and this, meetup is just, meet and connect with people and potentially, partner. That's
Yeah.
really, Tiffany just dropped something in the chat of a property in Stanley. And as we talk, and that was one of the things I found very early on. For me, my journey started, I guess, in 2019, and then 2020 I started meeting people, and you start to realize also that everyone's kind of looking at the same markets and putting in the same deals. And so why, instead of competing with each other, maybe just connect and work together, because you'll find something where 5 of the 10 people are going after the same deal. If you come together and work together, you do that. Now I do want to, it's this question for both of you or anyone else who wants to jump on this, is that the one thing I feel though that it gets glossed over in kind of educating yourself in this space is that you do need capital to start. And let me know your feelings, but you both, John, you just said it was you and a partner on that 16 unit, so you're putting in your own capital. Rachel, sounds like you and your husband putting in your car, so I think that part though needs to be a little bit more talked about in kind of the education space, that you do need a certain amount of capital to get this started, right?
I could start. I'll start off for getting Rachel. So yeah, for the 16 unit, yes, that was I brought the capital to the table. I mean, my partner brought in a little bit, but that was more of the he was taking care of all the legal fees and everything like that. I came to the table with the capital to get to the closing table. And by the way, on that first property, we already pulled out the money, so we bought it for 845 and it got appraised for 1.6. So you already were able to pull out most of the capital that I contributed, and that was in 18 months. Because we did 14 to 16, we renovated 14 to 16 units. But in any case, not, you know what, so yeah, I brought capital, but guess what? My partner brought very little capital. Now he's involved in 6 property. Actually, you know who it is, Jerry. But he literally, compared to what I brought to that first deal, he was the person who found the deals. So he got involved in 6 properties with minimal out of pocket. So yeah, it is possible to close to zero as possible. Bringing, you can find people who have money. Always thing that that Kiyosaki always says, other people's money. So it's very possible to use other people's money to get the ball over the goal line. But in my case, yeah, it just made it that much simple. Like, he came to me and said, "Hey, can I was just so interested in getting into, obviously I had a little bit of a nest egg built up, and said, I know I could do this when I was just transitioning out of my W-2. So yes, does it make it easier to, but if you have capital, you could just jump into an LP deal. You could do that too. But if not, yeah, it's going to take a little bit harder work. The partner who brought me in was just finding deals and writing LOIs like crazy until he found a great deal, and then he presented it to a bunch of us in the mastermind, and I'm the one who raised the hand saying, "Hey, I'm in. Let's do it." And like I said, that helped us snowball into a thriving company now, where we're on the verge of having our 6th property, and with more LOIs going out weekly.
That's awesome. Yeah, it's a good point. So yeah, I mean, I guess you have to bring something. It's either finding a deal, capital, like those are really the two that marry off very well.
I've got another that I just talked to a contractor this week who's trying to get into multifamily investing, and he's bringing to the deal his skill set as a contractor. Like, he's not bringing any money to the deal, and he's not really finding the deal, but he's coming in as a partner because he knows he can manage all the renovations, and he can manage the people, and he knows how to run the contracting side, which personally I think that's one of the hardest things, is finding the reliable contractors to do the work for you at a decent price. So that's definitely a valuable skill set as well, if you've got that. But yeah, you got to bring something. And it doesn't have to be you personally, but somebody on the GP team needs to have some capital available, because you also want to be able to close the gap. Like, if you are short 50K at the end of a raise or something, you don't want to lose the deal over that. You want to have some amount of something in your back pocket something that you can kind of go at it with as a GP team, but it doesn't have to be you in particular. So you kind of need to find your partners that can help you out if you don't personally have money. But finding the deal is the best way to get people on your team like very quickly. Like that's something people are struggling to find right now. You find a deal, you're gonna be able to pick your partners. Essentially, you get to pick the team you work with if you find the deal, and that's a powerful thing.
No, that's good. So Tiffany asked, there's a lot of volume. How many brokers are on your market? I don't know if that's for John. Although I will say one thing, John also has an interesting story where his property manager, I don't know if he still is, but it was the mayor of Greenville, North Carolina. So I think that kind of helped there. But yeah, I mean, I guess either one of you guys want to answer that about the brokers. How many brokers are in the market?
There's over 60 on my list right now.
Wow. Well, Charlotte.
And that's just, and it's Charlotte, right? So it's huge, but there's more than that. I know, like that's just the list that I've got. So there's brokers all over the place. Making the relationships with the right ones is the part that I'm still working through, because yeah, you start out, even the bigger brokerage firms, right? You can call them, but you're on their like junior broker list until they figure out that one, you're serious somehow, like however you can prove that you're serious, or two, they can't sell a deal, and then you move up the ranks too. Like those are until you really start getting up there, which sounds like John's gotten up there on some of the lists because Jacksonville and Greenville. But yeah, Charlotte's definitely a hard market to get into the upper echelons of the brokers and onto their first call lists. I'm still working my way up there.